Hi, I'm Alex and welcome to the channel. So in today's video, I want to talk to you about Shopify. Now this is the next video in our series 60-second stocks, where in 60 seconds, or as close as possible to 60 seconds, we talk about the key things that you need to know about this company before making an investment into them. Now, I'm not a financial advisor. This video is purely for entertainment and educational purposes only, but I'm a professional investor with over 10 years of investing experience. Now, Shopify's performed amazingly well this year. The share price has increased by over 100%. And a big part of this can be attributed to the lockdown as a result of the health crisis. What it has done is it's accelerated the shift to online retail, and Shopify has been a main beneficiary of this. Now currently Shopify has a market cap of around $96 billion. It trades at an EV sales basis of around 55 times. EV, EBITDA, PE multiples don't make sense given the company is not profitable on those metrics. And Shopify is the second largest e-commerce platform in the US after Amazon. So, is Shopify a good investment to make? Let's get straight into it. Let's start with the revenues. A lot of supporters of Shopify will argue that the valuation is supported by the high growth prospects of the business, but let's break this down a little first. Revenues from subscription services account for just over 40% of the company's revenues, and those are where customers are paying Shopify a monthly fee. If they're using Shopify, they have to pay. If they don't pay, they lose the services provided by Shopify. Now this is the much more resilient part of the business. However, even in their Q1 earnings call, the company noted that customers were already downgrading their plan. Also, when you actually dig into it a bit further, you realize only about 85% of this revenue is truly recurring and subscription based. The remaining 15% is upsell of things like themes and other services to those customers. It's worth noting this is also the much higher margin side of the business. Now the other part of the revenue is the merchant solutions side. Now this is revenue that's generated from customers that's related to transaction volume and value. Ultimately, this is the piece that will definitely fall the quickest in any recession. It's also the lower margin part of the business, but as this revenue line's been growing faster, it means that the overall margin of the business has been decreasing. Now, it's also really important here just to note the difference between a regular recession, where you have a massive hit to demand, versus the impact from the health crisis we've seen, where supply has been artificially suppressed. Finally, only 25% of Shopify revenues are generated outside the US, so versus some of the other competitors, it's a lot less geographically diversified. Next up, given where we are in the economic cycle and the negative economic indicators we're seeing, we need to think about how Shopify may perform in a recession. Now, Shopify is mainly a proposition for small and medium-sized companies. And as history shows, these are the ones that get hit hardest in any recession. These are businesses where there's the greatest number of bankruptcies and where they face the greatest financial stress. And this ultimately exposes Shopify to those risks as well. Yes, the business doesn't have massive amounts of debt, which is good in these scenarios. However, as a private equity investor myself, I'm a firm believer that the right leverage, the right debt for a business is an extremely powerful tool. But ultimately, is there a risk that Shopify may need to raise new equity, thus diluting us as shareholders? Now, the final piece for me is valuation. Shopify is trading at a massive multiple premium versus some of its peers. Let's compare that to Amazon, which is trading around 4.5 times EV sales, and Wix at just under 14 times. What this really means is that you need massive growth from Shopify to support this valuation. Given what we know about the revenues and stability of those, especially going into a downturn, this is an area where I have some concerns around the sustainability of valuation. Yes, there are some other valuation metrics you can look at, but I'm running out of time in this video, so I'll come on to those in the future video, if there's interest. Now, the final important observation to consider here is on the basis of the recent news we've seen, Shopify partnering with Walmart. What became very apparent is that no economics are flowing to Shopify. What this highlights is that Shopify is not a third-party marketplace like Amazon, like Walmart, like eBay. Instead, it's a service provider, and that's reflected in why the margins are much lower for Shopify versus some of those other companies. I've seen a lot of hype about why Shopify is the next Amazon, which I just totally disagree with. Look how integrated into so many people's daily lives Amazon is. I just fundamentally disagree with that comparison. But again, I have way too much to say on that topic to cover in this video. So that's it. Whilst I think Shopify has a great proposition, and yes, I am a customer of theirs as well, for me I have too many concerns, especially where the valuation is, especially where we are in the current economic cycle, for me to believe that Shopify is going to be able to deliver on the growth it needs to in order to support the valuation. But look, anyway, I hope you found that video interesting. If you liked it, please hit the like button, please subscribe to the channel, it's massively appreciated. And as always, let me know your thoughts in the comment section below. I find it really interesting to hear everyone else's thoughts and perspectives on the issues. So look, thank you so much for watching, and I'll see you in another video.